Welcome back. My guest host, once again, Julie. How are you, Julie?
Good morning, Sammy.
Welcome back, everyone, to our ongoing information on real estate investing and general economic news. This particular module, we're going to talk about when wondering how much money to invest in something. Ask yourself this question: how much can I risk and still sleep well at night? If the value of your investment started to decrease, would you likely panic and sell? Or can you afford to hold out for the long term if that's what makes sense? If the worst happened and you lost the entire amount you invested, which is the down payment, right? 20 to 25% down payment as a real estate investor, would it result in a financial setback or financial devastation? Use your answers to these questions to determine an amount that you can sleep comfortably with. Only you can decide how much you feel comfortable investing. Julie, this short Q&A for the audience out there. Look, over the years, I run a real estate investment network for more than 20 years, and you're part of a member of my network. You have purchased 4 years ago around 6 rental properties out of state in upstate New York, Buffalo, Niagara Falls, and what have you. Although most of our investors, turnkey mom and pop investors, are located in California. So over the years, I've run into people, our member within our investment network, that are engineers or medical professionals that have a very high net worth. They make like $300,000 per year. They have like a couple of $100,000 to invest. They got a lot of money to invest. So they are looking to buy investment property out of state, anywhere from $80,000 investment property or $250,000 investment property with cash flow. Let's take an example of like $80,000 investment property at 20% down payment. That's only $16,000. Okay, that's the at risk portion. Plus clear a few $1,000. The total out of pocket is $20,000. Some of the cases that I've interviewed or past investors who have a high net worth. California, a lot of us are very financially well off. They're not comfortable with risking 15 to 20 grand. If something goes wrong with this $80,000 investment property in the Midwest, whatever, they're gonna lose. They don't feel comfortable. They can't sleep at night, risking $15,000 down payment to buy a $80,000 investment property that will provide positive cash flow, long-term appreciation, the whole 9 yards. So why, seemingly, financially speaking, a lot of the investors that we work with that seemingly have so much cash reserve, so much nice financial profile, and yet they can't risk 15, 20 grand. They think if something goes wrong with that cheap little turnkey property, they think their financial life will be totally destroyed. They will lose their home. They will become homeless. That's how this newbie real estate investors think.
Right.
Potentially give a house getting foreclosed, a rental property getting foreclosed, or something goes wrong with that particular market where they bought the investment property. All hell will break loose. They think they're gonna foreclose on their home because the rent, they're not collecting rent, or there's a vacancy, whatever, and then they think all this very bad scenario. Their mindset is such that the creditors gonna come after their personal asset. The renter gonna sue them and gonna lose all their possessions, their primary home, their stocks, their bonds, and everything else. They can become homeless. That's how many people think.
The gloom and doom mindset. You think you asked a really good question at the beginning. How much could you afford to lose and sleep well at night? And I think that really becomes the question. And I think that's what most investors should really ask themselves, or I would say potential investors. I think after you've done it a few times, you already understand it. But because I think that really gets in the way of a lot of people moving forward on an opportunity that they could take advantage of, but they just feel like, if the market goes down, I can't sleep at night. Maybe you're not an investor. I think it's learning how to tell yourself the truth.
Yeah, you need to eat. So here's a short takeaway. My takeaway is this: not everybody can become an investor. Whether you have a high income job, you have a good cash reserve, it doesn't matter. If you do not invest in your personal mindset, it doesn't matter. You risk $20,000 or you risk $100,000 to buy a larger investment property. It doesn't matter. Okay, is people would just have this negative self belief system, lack of confidence. They can't. They think all things gonna go bad for them. So it is, and not everybody become a risk investor, and that is sad, right? You and I know that is a great wealth building tool for the long term, but human beings, it is what it is. Yeah.
Yeah. It's good. No, it's good. Yeah, like you said, it just really, it is a mindset. Investing is not necessarily about the money because I'm sure you have some very high net worth clients that are still waiting to get in. Oh, waiting for the right time, the right moment, or the right interest rate, or the right whatever. And it's really not about that. It's just gearing your mind to understand the bigger picture and really having a goal set, a long term goal set, not a short term goal. Because if you're always looking at the short term, you'll never make a decision because
Yep.
the things can change just like that. And then you're like, oh, I'm glad I didn't get in, or I wish I should have gotten. You just got to decide what's important.
Very good, Julie. Very well said. Thank you. And everyone, thank you for watching. If you receive any value from this video, please like and subscribe to my YouTube channel and put your email into our website so you can become a free member of our real estate investment organization. Thank you so much.